Hey everybody, Greg Barron, Professor of Real Estate. Thanks for joining our YouTube channel again today. You're going to want to stick around because today I'm going to give you 10 of the items that I use for my own checklist for purchasing real estate. Stay tuned. So with every piece of property that I purchase, it's essential, and you've heard me talk about this before, that you have a franchise system and you run your real estate business and even your purchasing side of the business like a business. So I like to call it franchising a process. So in this particular video today, I'm going to go through those 10 items that I do no matter what I'm buying. Multifamily, retail, well, not much retail anymore, office, any type of purchase that I do, I go through a specific checklist. That's a hard word. Specific checklist each time that I purchase it. So the first one, and these aren't necessarily in order of importance until you get to the last one, is review the property condition report. So a lot of your smaller deals, maybe single family homes, won't have as much and as breadth of a property condition report as some of the bigger ones, but the same principles apply. So what you're looking for primarily are those items that would be called out in the disclosures. And most importantly, you want to look at any anomalies that might be attached to that property. A property condition report is really your first opportunity to do your initial due diligence in your checklist. The second item on the checklist is be sure and review all of your municipal permits and any certificates that might be attached to that property. So when I'm talking about municipal reports, I'm talking about anything that has been issued by a government agency, including the cities or any statewide agencies that you might deal with. Those would be things such as any code violations, any permits that you might have, and any certificates of occupancy that might be specific to your particular project. Some of you might ask, why a certificate of occupancy? Why those permits and those sort of things? Wouldn't they already be issued if people are occupying it or businesses are occupying it? Well, let me tell you, I've seen some situations where there are specific code violations prior to acquiring it, and I've even acquired some in my history. And you remember, the only reason I'm an expert at some things is because I have failed miserably at many things. I've had code violations on the backside of purchasing it. Let me give you an example. We had this property in Austin one time and purchased it, had a creek next to it. Unbeknownst to us, within the past violations that were registered in the city was a big red flag that this whole creek, which ran the length about 500 or 600 feet, was supposed to be maintained and dredged, and there was a violation that was not in compliance. This one particular issue that we didn't uncover in our due diligence with code violations, permits, and those sort of things cost us well over $100,000 after the fact because we were the owners to satisfy city requirements. So make sure in your due diligence process and in your pre-purchasing of property that you uncover any potential code violations that might be attached to the property. Number 3, review all capital expenditures that could have been done on the building in a trailing 3 years. And more importantly, if you listened to my video last week, make sure that you get a list of any potential deferred maintenance that could decrease the value of your property. The reason number 3 is so important is you've got to do one of two things. You've either got to adjust the purchase price or you've got to add money for funded reserves, which could change the dynamics of whether it's a go or no go. Trying to identify funded reserves or capital additions is so important. We've dedicated in the software a special tool to be able to project those because we know from past experience if you don't, it's going to bite you and it's going to decrease your cash on cash return and ultimately you're going out rate of return that you have upon exit. So let me show you real quick what I'm talking about. If you look at the reserve button right here, you'll see that we have dedicated 2 line items here for capital additions and funded reserves, and in some cases interest reserve, but for this purpose we are talking about funded reserves. So all we would do is add in the description there of what we anticipate, And maybe it's funded reserves for future appliances if it's a multifamily. Maybe it's additional carpet expenditures if we've got an office environment. But we want to make sure that we enter something, whatever that is. I mean, I could enter here HVAC units because maybe I'm down to a 5-year life and I know I'm going to keep the project for 10 years. So this gives me the opportunity to always be realistic that there's going to be something that's going to come up. Try to account for it. Number 4, be sure and review all rent rolls and review all renewals within the body of those rent rolls. So 3 things while you're reviewing rent rolls and looking at lease renewals. Number 1, are all the deposits that your tenants have paid in the past accrued for? You want to make sure that you do your due diligence to make sure those deposits are accounted for in the accounting. Because if you purchase the property and those aren't accurately accounted for, whenever they vacate their space, they're going to look to you to recover that deposit that they paid in the past, regardless of whether you didn't know about it or not. Number 2 is you want to match those rent rolls to the pro forma that you have. I don't know how many times I've seen an offering memorandum when the actual rent roll does not align with the pro forma that I was presented with when I was doing the initial valuation. So make sure that you double check that the rent roll that you have matches the pro forma that you've been given. The last thing that you want to do when reviewing rent rolls and lease renewals is you want to look at the payment history of your tenants. Let's face it, if you're looking at a couple of projects, all things being equal, and you've got one project that it's a struggle for your tenants to pay every month, and another one that's equally aligned with that as far as your returns go that fits in your buy box, you'll want to pick the one that where you don't have to struggle so much with the payment history of tenants, and you don't want them to be ornery when you try to collect your money. The 5th thing on the checklist is you want to review your property taxes and your existing utility bills. A couple of things about reviewing property taxes and utility bills. Number 1, you want to make sure that on your property taxes, there aren't any existing liens that are attached to the property in any way. So you want to contact the local taxing authority to make sure there's not any liens attached. The next thing is kind of a little secret I have, which is checking your utility bills in a 3-year trailing method. So the reason I want to look at utility bills is pretty simple, actually. I want to see the spikes in the heating and cooling months over a 36-month period. That'll take me through a hot summer and a cool winter. And it does give me a little indication if how my units are performing and if they're efficient. Now, granted, utility costs have gone up, but anything that I can grab to see if overall, if my energy bill is going to remain constant or if I'm going to be on the backside of failures, those are the kind of things that I'm trying to see. I'm not always successful. I could buy something and have a unit that go out 2 months later. But for the most part, that along with some of your forensic exercise will give you an idea that a lot of people don't look at. So look at your utility bills in a trailing 36-month time frame. So number 6 is kind of a duh, but you want to make sure that you get accurate profit and loss statements for the last 3 years. This is probably one of those items. If you don't eat, sleep, and breathe accounting, you probably want to get your CPA or the person that's guiding you in the financial decisions to really take a look and drill down in 36 months. The primary thing that I'm looking for is, does the profit and loss statement, I'm not talking about the tax statement, I'm talking about the actual cash accrual profit and loss statement, does it align with the pro forma that I've been submitted? Most of the time, I'm going to find something. I just want to make sure that those profit and loss statements are very much in the land of real. So don't take it for face value that your offering memorandum is going to be totally true and correct. You know my position that I've said before, trust but verify. The 7th thing is, make sure that you're looking at each and every unit if it's an apartment unit, or every commercial space if it's anything other than that. The primary issue is you don't want to leave any stone unturned, so I'm going to visit every unit and see if there's any anomalies in every space or unit. So make it a point. Number 7, do your physical site evaluations. Climb up on the roof. So number 7, do your physical site evaluation to every space or every unit that you are thinking about purchasing. Number 8, review your existing zoning to make sure it complies with the use that you're purchasing it for, and also take a look on your survey of any easements that might be recorded. So again, you might think, of course it's zoned appropriately. You would be so surprised. I mean, we deal in this space all the time. You want to verify that it's zoned for the intended use. And in some odd cases, and I've seen them, there are some properties that were zoned for a specific use that weren't transferable to the next owner. And the one biggie within number 8 with zoning and easements is verify that you don't have some obscure easement or some kind of variance that affects the intended use or that's attached itself to the property that you have. I have a specific story on this to an office that I developed one time that had this obscure easement by the state that was associated with a prior off-ramp that they were going to put on the freeway in front of me. When I got ready to sell the property years later, there was this easement that had shown up that had been there seemingly forever, that to satisfy the future buyer that I was going to sell it to, this particular easement had to be vacated. Now, how it got past all the original stuff, I'm not real sure. But I will tell you, dealing within the civil engineering space, as much as we do, these things crop up. You need to take a microscope to any easements and any variances and any encroachments that you might have. So just make sure that if you've got any encroachments or variances that you've satisfied the lenders and your title companies in the process. Number 9, make sure that you do all your comparables or comps. This is your opportunity to look at the market in general. Number 1, to see if you've got any value add opportunity, whether it's a commercial or multifamily or medical space, to be able to incrementally increase rent once you've purchased it. Or number 2, you need to satisfy the fact that the existing rates are going to be sustainable in your particular space that you're trying to acquire. And number 10, and this could be the most important thing that you do in your checklist, make sure that after you've done 1 through 9, that you've taken all that forensic information that you've developed and you reinsert it back into your performa, and you're able to determine what your new returns look like, what your NOI looks like, what your going out internal rate of return would be after you have determined if there are additional funded reserves, if there's additional expenses, or those sort of things that could affect your performa. Now, the reason that's so important is what you looked at going in might be totally different going out. So you want to be able to go back to the brokers or back to the owners that are selling it and do a potential retrade at the price that you determine, not what they have put it on the market as. But you can only do that after you've done 1 through 9. And by the way, if you're enjoying the content, as always, be sure and hit the like and subscribe button for me so we could keep pumping out this content. Additionally, if you'd like to have a purchase checklist, check the link below and we'll get one emailed out to you. Thanks so much for joining us today. And remember to always educate, evaluate, and execute to increase your own personal wealth. We'll see you soon.